And we see demand from ETFs, which are pulling in hundreds of thousands of Bitcoin per year. Corporations, as we discussed, also purchasing hundreds of thousands of Bitcoin, and governments purchasing, in our view, hundreds of thousands of Bitcoin. As this structural demand supply imbalance plays out in the market, it's exhausting the available supply. We think we're close to breaking out to new all-time highs. And when we do, we think, the market could run all the way up to 200,000. We think the demand from institutional investors and corporations and governments around the world are enough to lift this market much higher. It is just a fantastic setup for Bitcoin right now, with worries about the dollar, growing institutional demand. I think it's going to be a fantastic second half of the year.
Hugan highlights a major shift in how corporations manage their cash reserves. Traditionally, multinational companies have held excess capital in US dollars or short-term treasury instruments, viewing them as safe and liquid assets. However, rising concerns over growing fiscal deficits, persistent inflation, and continuous money printing are leading many to reconsider this approach. Increasingly, companies are turning to Bitcoin as an alternative store of value, one that offers resistance to monetary debasement and inflationary pressure. This trend reflects a broader move away from fiat-based strategies toward digital assets that offer long-term financial resilience. And before that, be the one who says, I was here before 100K. I'm on a mission to hit 100,000 subs before 2025 ends. Help me get there. Subscribe now and drop your thoughts on the market in the comments. Let's grow and win together.
We think this is a mega trend, by the way, that's going to accelerate into the future. One, of course, is increased worries about the dollar. Corporations globally are sitting on records amount of cash, and what they've historically done is park it in short-term US treasuries or, in fact, in cash accounts. But with the huge money printing and growing deficits, that no longer seems like a valid approach. They need another way to protect their wealth from degradation, and they're turning to the best horse in that race, which is Bitcoin. Beyond that, the investing audience has just recognized that this is a positive strategy. And so companies are being rewarded for taking this bold step of putting Bitcoin on their balance sheet. We think there will ultimately be thousands of companies that do this. We think we're in inning 1 or 2 of this mega trend period, but you're seeing it accelerate over time. It's very exciting. Look, for crypto to really reshape how the world's global finance works, which is the market we're going after. That's how crypto goes from $3 trillion to a $30 trillion market. We have to be at the center of how global finance works. We need to rest on a strong foundation. Right now, crypto regulation in the US, which is the world's economic center for better or worse, rests on executive orders and legal interpretations. There's no laws that protect it for the long term. If we look back at the history of technology, we've seen major laws set the standard that allowed for technologies like the internet to grow and dominate the market. We need the same thing in crypto. And the fact that we made it through the Senate, at least onto the floor, we passed the most difficult hurdle, tells me that we're going to get there. If we do get there, I think we're looking at the longest and most sustained bull market that crypto has seen. I think it takes us up a major leg in terms of what crypto can do. Just because Bitcoin is volatile, when you add it to a portfolio mix, it doesn't increase the volatility of the portfolio overall because it's not correlated with stocks and bonds, right? That's the famous free lunch of investing. When you add a non-correlated asset, it can improve your risk-adjusted returns without increasing your volatility. But the other point I was making is something that I find when I talk to crypto native investors, which is that they tend to have very large allocations to crypto. And you might think that would increase the volatility of their portfolio, but they offset that by making the rest of their portfolio more conservative. Because they're taking a big bet on crypto, they don't need to take as big a bet on equities or on bonds. They can hold a significant amount of cash. And I think if you play with the ratio between the stocks, crypto, and low risk bonds in your portfolio, you can create some really exciting returns, really dynamic portfolios. The old days of having 60% stocks and 40% bonds, I think those are over. I think people need to move to a new kind of portfolio that looks at stocks, cash, and crypto and modulates the risk between them to get the kind of risk adjusted returns that they're looking for. Yeah, we still are holding by that prediction. I think that's how the market is setting up. When we look at the market, Talia, we see a structural imbalance between the demand for Bitcoin and the available supply. We know the Bitcoin network only produces 165,000 Bitcoin per year. That's the full supply. And we see demand from ETFs, which are pulling in hundreds of thousands of Bitcoin per year. Corporations, as we discussed, also purchasing hundreds of thousands of Bitcoin, and governments purchasing, in our view, hundreds of thousands of Bitcoin. As the structural demand supply imbalance plays out in the market, it's exhausting the available supply. We think we're close to breaking out to new all-time highs. And when we do, we think, the market could run all the way up to 200,000. It would help if the US government announced net new purchases of Bitcoin for its US strategic reserve. It will help if we get passage of the Genius Act and maybe market structure regulation in the US. But even if those things don't happen, we think the demand from institutional investors and corporations and governments around the world are enough to lift this market much higher. It is just a fantastic setup for Bitcoin right now, with worries about the dollar, growing institutional demand. I think it's going to be a fantastic second half of the year. I'm still optimistic that we'll see stablecoin regulation in the US. It has bipartisan support, and more than anything, the US government actually needs it to pass in order to continue to fund the government. Remember, stablecoins have become a major purchaser of US treasuries, and the government is on pace to issue more and more treasuries, more and more debt. So I think smarter heads will prevail. I think we'll get this through the Senate. I think we'll get it through the House. I think it will be signed by the president. And again, I think that will set the stage for a major bull market in crypto that could extend for multiple years.
Hugan addresses a key misconception among some investors regarding the nature of companies like Bitwise. He clarifies that Bitwise is not a closed-end fund or a passive holding vehicle, as many assume. Instead, it functions as an operating company, which gives it a unique level of flexibility. This structure allows Bitwise to issue preferred shares, generate income through various financial strategies, and actively manage its Bitcoin holdings. By doing so, it can create additional value for shareholders beyond simple exposure to the asset itself, making it a dynamic player in the evolving digital asset landscape.
As you mentioned, I can't speak to our specific filings, but I can say that I think the SEC is moving in the right direction. If you look at what's happened since we launched Bitcoin and Ethereum ETFs, all they've done is that they've lowered the cost for investors and increased the security, right? We've dramatically reduced costs. We've dramatically improved security. They've been a net win for investors. What that tells me is that we can go further down the spectrum to these other alternative assets that people want exposure to, that they're currently buying exposure through centralized exchanges, which may have high fees and security risk. Why not allow them to access it in a safe, secure, low-cost ETP format? There's no guarantee that we will get there, but if we're reading the tea leaves, we're very optimistic on many of these alternative assets. Not every crypto asset needs an ETP or should get an ETP, but we think investors want and should get exposure to more assets than just Bitcoin and ETH. And I do think we're going to get there towards the end of the year. The SEC is very constructive. They're open to discussion. It's a breath of fresh air, and we're really enjoying it here at Bitwise.
What he still doesn't understand is we're not a holding company or a closed-end trust. We're an operating company. So when we issue, trust can't leverage the Bitcoin. They can't issue preferred shares. They can't issue permanent shares of equity at a premium. We can. Our company's generated a BTC dollar gain equal to about $8.4 billion in the first 2 quarters of this year. That's the equivalent of earnings for a Bitcoin treasury company. Our target for the year is $15 billion. And so he's valuing the business that's generating $8.4 billion of shareholder value at zero. And he's hoping that somehow the equity will trade to NAV. But what he's not paying attention to is, if we can issue preferred shares that yield 10% and invest it in Bitcoin, which has been going up 57% for the past 4.5 years, we're capturing the 47% arbitrage effectively risk-free for our common stock shareholders. And if you want to value the company, you have to value the company's ability to generate Bitcoin yield or Bitcoin gains over and above the actual holdings of the Bitcoin the company has. if the company generates $10 billion of Bitcoin gains this year, you got to put a 10 or a 20 multiple on it, right? So, so the Bitcoin treasury company operation is worth a multiple of 10, 20, 30, or 40 times the BTC yield we're generating. That's the number one source of value for the operating business. And then the company also has $60 billion plus worth of Bitcoin. And I would say to investors, look at it that way. A BTC dollar gain is like our earnings equivalent. And then the Bitcoin NAV is the assets on the balance sheet. And you should just look at the earnings equivalent and put the multiple that you think is appropriate on it to come to an opinion about the value of the entire enterprise. I don't worry about it. And I make the point, Microsoft and Google market their quantum projects, but they would never sell a quantum computer that cracked cryptography because it would destroy their own companies. And there isn't a practical use case for those quantum projects they've been marketing. I think at some point, a decade out, maybe 10, 20 years, maybe whenever, there'll be a powerful computer. It may start to threaten modern cryptography. When it does it, it'll be a threat to Microsoft, Google, JP Morgan, the US government. It may be a threat to Bitcoin. When it is a threat, all of these organizations are going to upgrade their crypto protocols to be quantum resistant. You'll see it coming a mile away, and every other digital entity in the world is more vulnerable to that idea or that threat than Bitcoin. And so they're all going to upgrade, and we'll be talking about it while you're reviewing Microsoft stock or Apple stock exposure.
Before concluding, Hugan briefly tackles the often cited concern that quantum computing could one day break Bitcoin's cryptographic security. He downplays the urgency of this issue, framing it as a long-term challenge that is likely decades away. When quantum computing does reach that level of capability, he notes, it won't just be Bitcoin at risk. Every major digital system worldwide will face the same threat. By that point, leading institutions like Microsoft, Google, and the U.S. government will be heavily invested in upgrading global cryptographic standards. In that context, Hugan argues, Bitcoin is actually better positioned than most systems to adapt, thanks to its open-source nature and the active development community constantly working to improve its resilience. Stay ahead in crypto. Tap this video to keep learning.